Let's get some business news now with Ed Boyd. Ed, the RBA lifted the cash rate to its highest level in 6 years yesterday. Have any of the major banks moved yet?
Pete, nothing yet from the major banks. Look, this is the fourth interest rate rise this year, and the first one back in May. The major banks all moved pretty quickly, and basically by the end of Tuesday night, 3 out of the 4 major banks had already passed on those interest rate rises to customers. However, this time around, banks are being a bit slower. They're sort of waiting. I think they're waiting for one of the other big banks to move, and they'll see what each bank's doing, and then they'll make their changes. So expect it to happen either today or early tomorrow morning. So it could take them another sort of day and a half to pass these rates on. But we know rates are going to be going up. Standard variable rates are around the 3% mark at the moment from banks, around the 5% mark at the moment from banks, and they're probably going to be going up a bit higher than that too. So Expect that to happen. I got a bit of a change in my background.
No, it looks nice, Ed. Meanwhile, the stock market jumped yesterday after the rates decision. So what did investors like about it?
What investors liked was seeing the statement from Governor Philip Lowe basically saying how the RBA is going to start tempering its cash rate hikes. So basically, in other words, they're not going to be lifting rates probably by 50 basis points at a time anymore at the upcoming meetings. There are 4 cash rate meetings left for the year. The market's now expecting the RBA to raise rates by probably about 25 basis points or thereabouts at these upcoming meetings. So the market really liked that. Yesterday, the stock market was in negative territory. And then at 2:30 in the afternoon, when the interest rate announcement came out, it just shot up and it finished the day up about 5 points. So market loved it yesterday.
OK, and Ed, on Friday, the RBA will release its quarterly statement on monetary policy. Economic growth this year downgraded by almost a full percentage point.
Economic growth this year has been cut back by about 0.95%, so basically a whole percentage point. It was expected to grow our economy at about 4% this year. Now it's roughly growing around 3%, so a bit over roughly 75% growth each quarter for the course of this year. The other thing, though, is next year's economic growth is now expected to be 1.75%, and the year after that. So economic growth is starting to slow down in Australia. The RBA calls that out in their statement, and they believe unemployment at the moment is at 50-year lows at 3.5%, but they say next year as the economy starts to slow down, expect to see that unemployment rate start to tick back up again. So that's the challenge that we're facing over the next 12 months with our economy, Pete.
OK, Ed, thank you.